Hello and welcome to this 25th post of Investing Not Rocket Science. Investing doesn't have to be rocket science, and this is our non expert guide to portfolio management. In this post, we look at an overview of the portfolio. We share our portfolio every week, and this portfolio is up 3.62% since inception, while the benchmark is up about 0.9%. The annualized return on this portfolio is 18.1%. In terms of risk measures, the portfolio has a Sharpe ratio of 2.13, a Sortino of 3.16, and a standard deviation of 0.39. The biggest gainers in the portfolio are Alphabet, which is up about 19%, Glencore, which is up about 17%, Vodafone, which is up about 9%, Swire Properties, which is up 6.5%, and BMW, which is up 5%. The largest detractors remains Deutsche Bank and JD.com at -6 and Citigroup at -6 as well. All asset classes, equities, fixed income, real estate, and cash, have contributed to the positive performance in the portfolio. Okay. A quick recap of this series so far. In the first episode, I defined a basic portfolio framework. The objective of this $1 million portfolio is to beat inflation and an equity index. From posts 2 to 20, I've evaluated 67 stocks and 4 potential bond additions. And from post 21 onwards, they've been focused more on the quarterly earnings, the Q1 2023 earnings specifically for the stocks in the portfolio and in the watch list. The portfolio is long 16 stocks and one bond, and short one stock. You can follow the blog on our website www.claritech.app. Okay. The portfolio has a regional weight of 7.9% in Asia, 52% in Europe, and the remaining in North America. I think there is room to add more stocks in Asia. In terms of asset class allocation, equities is 40%, fixed income 29, real estate close to 5%, and the remaining in cash. The portfolio is short Nvidia, which is a hedge. What were the portfolio transactions that have taken place last week? So last week I added a new long position in Tesla and added to the existing short position of Nvidia. All right, so you see Tesla there, which is already up about 3.8%, and we've added to Nvidia. Okay. The portfolio was down last week about 0.27%, so relatively flat. Most of this negativity came from the equities, primarily because the Nvidia short. So Nvidia rallied last week, and obviously, since we are short Nvidia, that is a negative bearing on the portfolio. Also, last week we see there was dips in Infineon and in AP Moller, both of which have about a 5% weightage in the portfolio. Okay. What else did we cover in this post? We looked at economic data and particularly focusing on inflation, since we have the FOMC interest rate decision and the Euro area interest rate decision this week. We looked at a summary of the financial markets, and we covered some of the stocks in our portfolio and in the watch list that have announced results last week. Deutsche Bank, US Steel, Rockwell Automation, and in other announcements there was ExxonMobil and Chevron. We just covered a basic summary of the announcements, and this is pending a detailed evaluation in the coming posts. Okay. This is Investing, Not Rocket Science, a series on building and managing an investment portfolio. None of this is expert advice. I'm just learning alongside you. You can read this, the full blog, on www.claritech.app. You can follow or like these posts on our social media channels, and join our mailing list on our website, so we keep you updated of the latest posts. Thank you very much for watching, and I look forward to seeing you in the next post. Bye bye.